Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on DLF Ltd. Analyst retains a positive view on DLF given the strong growth potential in residential and scaling up of the rental portfolio. Pre-sales booking and collection jumped 3.1 times year-on-year and 88% year-on-year in Q1 of FY25, led by strong response garnered for Privana West, new Gurgaon project launch. Strong collection and rise in OCFs led to rise in net cash surplus. Q1 of FY25 consolidated revenue and operating profit margin surprised negatively, led by revenue booking from low margin old projects. However, net earnings stayed in line due to higher other income. Its launch pipeline for FY25 remains strong, with key project launches in second half. The management retained Rs 17,000 crore sales booking guidance for FY25, while it may revise it upwards post Q2. Next we cover Ashok Leyland. Our analyst maintains buy on Ashok Leyland with a revised price target of Rs 285, in expectation of sustainable double-digit EBITDA margin and its profit-focused volume growth strategy. While it missed EBITDA margin estimates in Q1 due to one-time cost pertaining to battery pack related expenses, the management has shared an optimistic outlook for rest of the year. Management aims for a mid-teen EBITDA margin over the period. The stock trades at a price to equity of 21.1 times and EV by EBITDA of 11.9 times its FY26 earning estimates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.